Hello, everyone, and thank you for tuning in to the Update with Oakwood Financial Group. I'm Joshua Doby. Really appreciate your continued willingness to be a part of this medium as we communicate with you. I hope and pray that this finds each of you healthy and well during this time of COVID-19. It certainly has extended a lot more than I think so many folks had anticipated as far as the duration of needing to deal with this. And it looks like it's going to continue to be with us well into 2021. And so we're going to spend some time here on this update talking about what that may mean, and certainly the financial, and perhaps even a note or two about the political ramifications of that as well. But thank you again for spending the time, and we certainly want to be respectful of that. So we'll go ahead and jump right in. First item that I want to discuss with you is more of a macro kind of thing, and you hear us talk about this with some regularity, but talking about the unemployment figures. They have continued to be stubbornly high. And we've had a significant drop from where we were about 4 months ago in terms of the total number of both new claims and continuing claims. However, we've still got a long ways to go. We've kind of flatlined a little bit, if you will, in terms of new claims. We're averaging about 800,000 a week. Certainly a whole lot better than where we were in terms of several million a week here just a couple of months ago, but still not declining here over the last several weeks. So we're continuing to watch that and for what that means. Also because a couple of very significant employers just announced this week that they're going to be letting go of a significant portion of their workforce. So that number is actually going to be trickled out a little bit. We'll see that coming through in the unemployment figures here probably in about 2 to 3 weeks. So we're watching that on the new claims. Continuing claims. Better trend line there. Again, we were up at about 25 million in terms of continuing claims. We're now down, we just dipped below 11 million. So a lot of ground made up from where we were, but still when you look at it in terms of quote normal times, you're gonna see that the normal times we were in between 2.5 and 3.5 million. So still a couple of times higher than where we were in the pre-COVID kind of experience. So still not very appealing, still needing to make a lot of movement to get back to more of a healthier kind of space. Good trend line, yes, but it's still a long ways to go. So that's on the unemployment end of things. Second thing, Federal Reserve came out again and has been maybe not as explicit as they were here a couple of weeks ago, but still pretty definitive in saying that they're going to keep a hard lid on interest rates and also watching very tightly on inflation. Now, you may say, okay, well, what does that mean for me? Fair question. For you, it means that unfortunately, those miserable interest rates that you have inside of your savings and checking accounts and CDs are probably going to continue to be miserably low. On the other hand, if you're looking to borrow money, say for a mortgage, say for a car loan, say for a business loan, you're probably going to find some of the lowest rates that we have seen literally in our lifetimes. So a positive thing if you're borrowing money, not a very positive thing if you're saving money. Also, what does that mean as far as the market is concerned? Well, in these kinds of unnaturally low interest rate and inflation kinds of seasons like we're experiencing right now, definitely has a huge impact on certain industries and not in a positive way. Tends to be very negative for financials, tends to be very negative for energy companies, tends to be very negative, frankly, for any kind of industry which is dependent upon either a higher interest rate or a higher spread or higher levels of inflation. And again, energy and financials tend to be pretty chief among those. Where it tends to be a very positive kind of thing are those companies which are most focused on capital appreciation. So you tend to find the fast growers, smaller sized companies, technology related companies. And we've seen that even here over the course of 2020 year to date, where those tend to be the companies that are doing the best as far as their performance is concerned. So again, it's a little bit of I'm going to use the word again. I know you've heard me say this now for several updates in a row. It's a bifurcated market. You have this collection of companies over here, industries over here, which are doing very, very well and likely will continue to do very, very well. And then you have this vast expanse of companies over here, which continue to be hurt significantly. And it doesn't look like there's going to be a turnaround anytime soon. Now, that being said, nothing that we're saying here is intended either as a specific recommendation for your particular portfolio, for your particular space, or as a prediction in terms of what we know certainly will happen. What we are doing, though, is we're trying to quantify the factors that we're seeing out there, looking at it in the scope of what we have seen over our 25 years of doing this, and attempting to understand what we think may come next. Anything's possible, and we certainly have seen that relative to our political experience here over the last several weeks, and let's go ahead and dive into that end of things. Now, I know we're talking finances, we're talking politics. I'm pretty sure those are two of the things that you should never discuss in polite company, or certainly around the Thanksgiving dinner table, which, by the way, coming up a lot faster than you think. Going to be here in several weeks. But as far as the politics are concerned, not going to make this an unnaturally political discussion, but in thinking about what that means for us next, there obviously are some very different schools of thought on different sides of the aisle about tax policy, about corporate policy, about what we intend to do as far as our international relations are concerned. Just hear from me in this moment, and certainly as we're talking about politics, become informed. As much as you can, strip aside the political rhetoric, which is heavy on both sides of the equation, and understand what it is that the true positions are on both sides of the aisle. It's very, very important to be an informed voter. It's very, very important that when you do cast your vote, you understand that for which you are casting your vote. So as much as you can, again, set aside all that crazy rhetoric, understand on which side of the ledger so many of our candidates are espousing certain positions. And very, very important. And the next big thing, and this again, regardless of your political persuasion, regardless of how you intend to vote, just hear from me again, please, please vote. Turnout is probably going to be a little bit higher than usual because it is a presidential election season, so we tend to get a little bit higher turnout, but we're still anticipating we're going to be in the neighborhood of 60, maybe 65% of the total amount of folks who could vote are actually going to vote. I know, it seems crazy. I don't know why we can't get significantly north of that for folks in their willingness to vote. But if history is any indicator, we're probably going to get to be in the 60 to 65% range. I know it's not very financial, except that it does impact our finances a whole lot. Please, 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 whether it's absentee, whether it's in terms of early voting or on November 3rd, whenever we all go to the polls, in the normal kinds of ways, please, please, please vote. All right, we got the politics out of the way. We talked a little bit about some macroeconomic figures. What does that mean overall for the markets? Well, we talked about the industries that we said are going to be, some are going to be favorably impacted, some are going to be negatively impacted. So then, I know, a very natural question that maybe some of you have in mind right now. Well, what does that mean for me? Well, I'm going to give you a terrible answer. It's different for everybody. You know, for the folks who are in their 20s and 30s and 40s who are still accumulating, it doesn't have as much impact. If you're in your 60s, 70s, 80s, and beyond, and you're thinking about what that means for you, probably going to have some more impact, but only in the short term. Meaning that the kinds of things that I'm talking about here, these are relatively short-term kinds of phenomena. And that's very, very important to keep in mind because it can become very easy to get sucked into the trap of just watching what's on our news, just listening to what's happening over our radio, and feel like we have to make some changes right away. That's no way to manage a portfolio. That's no way to manage a financial plan. Now, it can be true that there are reasons to make some tweaks along the way, not because we're trying to guess or we're trying to market time a portfolio, but because we see some things shift. For example, I'm just going to provide you something almost anecdotally here. When I first started out in this business 25 years ago, I know you can't tell because of my youthful complexion and voice, but it's absolutely true that I was in this business a little over 25 years ago. And it was true then that you bought bonds, or you included bonds in a portfolio, or especially if you were looking to construct a portfolio along the lines of what we call the efficient frontier, that you would have a certain number of bonds in your portfolio, primarily because A, they paid you a good coupon or a good interest rate, and then B, because they tended to be what we call negatively correlated to the stock market, or they tend to move in the opposite direction of the stock market, especially important whenever markets go down. Well, I don't need to tell you, again, if you look at bonds, and you don't even have to watch bonds in the same ways that we do, but if you're watching your CDs, if you're watching your money market rates, if you're watching savings account rates, it's absolutely miserable. It almost costs you money to be in those kinds of accounts. The interest rates are so low. So what was true 25 years ago, not true today in terms of buying a bond for the interest rate or for the dividend or the coupon that it may pay you. Now we're looking at bonds much more in terms of that second part that I mentioned to you, that negatively correlated aspect, meaning that one of the primary reasons to own bonds, and not all bonds, and this is important to keep in mind as well, it's not true that all bonds are the same. Bonds are very, very different. U.S. Treasuries are very different than corporate high-yield bonds. And so it's very, very important that you understand the difference between the two. But now bonds are being used more as a market hedge than for the interest that they may provide along the way, because again, interest rates are so miserably low. So just an anecdotal thought to keep in mind. Again, I'm going to provide the caveat, everybody's situation is different. It's not true that everybody should just own bonds, because the markets either are going to do poorly or may do poorly in the future. But something to keep in mind, something definitely to have as a part of your thought process, because if you're looking at it, in terms of the kinds of expectations that we all know that there are going to be negative markets in the future. But what does that mean for you as far as your overall plan is concerned? Is it the kind of thing for which you should hedge or not? Are you still adding to your 401k in your employer? Well, then you have an opportunity to buy some things on the cheap whenever things go down. That's an opportunity for you, again, as far as new money is concerned. On the other hand, if you're drawing money out of your portfolio, are your allocations where you want them to be? Again, just several things to keep in mind. Everybody's situation is unique, and it's important just to look at it through the scope of your own space. There is no such thing as blanket expertise or blanket advice. Every single person's space is unique, but just a couple, again, of those thoughts to keep in mind as we're going through this time. A lot of folks have asked, and so we want to bring up kind of some of these frequently asked questions. Well, what does the election mean for my portfolio? And the truth is, frankly, I have no idea. No, really, I have no idea. We do know some things from history, though, in terms of tumultuous elections, and there is perhaps the possibility that we're going to have a disputed election because things are so incredibly tight in terms of the expected result, meaning that it looks like it's going to be very close to a 50-50 kind of a vote. And I'm talking most especially about the race for the presidency. So it could be true that there is a prolonged kind of space where we don't know who is president. But you have to also look beyond that space. Yes, there are important considerations now. Yes, there are important things that we should keep in mind relative to what that space may look like. But unless your financial plan ends in 6 months, there really isn't something that should cause you unnatural concern. Now, does that mean that you shouldn't make any adjustments? No, not at all. But it does mean that we shouldn't just try to time the market or guess what it's going to do just based upon what's going to happen in the next 30, 60, or 90 days. I know that may seem like we're splitting an eyelash a little bit there, but it's very, very important as you're looking at your plan, as you're looking at your portfolio, to have the proper context in mind. Nobody ever likes to lose money, but here's something that's probably not a newsflash to you. In order to make money above where the risk-free rate is with the U.S. Treasury, we need to take some risk. And that's a very, very important item to keep in mind. All right, so we got the markets, we got the macroeconomic figures, we got politics. I guess we should just talk about religion now, since we talked about all of those things that you're not supposed to talk about in polite company. We're not going to talk about religion today. But in terms of thinking about what's next, the kinds of things that we see out there, we talked about the possibility for near-term volatility, but you have to keep that in proper context. It's not true that we should just go make some changes just because folks say that there may be some negative markets ahead. It's important to take it in context. It's important to adjust only if it's appropriate for you. Just because somebody across the street or a friend or otherwise is making an adjustment doesn't necessarily mean that it's the appropriate adjustment for you to make. 2021, there are a lot of factors yet unknown. Several of the big ones that are out there obviously have to do with COVID-19. What does it mean in terms of not only just getting the production of a vaccine, but then also the distribution of a vaccine? And then what does that mean as far as the reopening of the economy is concerned? I don't need to tell you, I'm a big football fan, and it is football season, as strange as it is right now. But even watching the NFL, we've had several games that are postponed or just outright canceled because of outbreaks of COVID-19 on teams and among staff. So what does that mean for 2021? Very hard to know at this point. We're modeling a number of different scenarios. Don't know what that's going to mean as we get into to 2021. But there are some things that we do know as far as there is more. And I even hesitate to use this word, but it's probably the only one I can think of quickly that applies to this, more certainty in terms of how we're addressing COVID-19. So once we have the vaccine, once it's widely distributed, we probably have some more benchmarks that we can utilize in terms of understanding how things are going to open and stay open and what those modified kinds of regimes look like. So stay tuned. Definitely going to share more with you as we have it, but at this point, still very, very hard to understand. Last item, especially from the political standpoint, and I mentioned this just briefly, and you've heard me say this now several times, and it's almost embarrassing to say it again, but it has to do with the upcoming legislation through Congress. I have now mentioned this by my count, at least 4, maybe even 5 alluding to it, different updates with you in terms of talking about the upcoming legislation. Still nothing yet. There may be something. Literally, at the time of this recording, there were discussions going on between the Treasury Department and the House of Representatives up on Capitol Hill. Maybe there is something. Hopefully there is something by the time that you even receive this in your email inbox, but at least as of the time of this recording, there isn't. And there continues to be a significant amount of disagreement about not so much about whether there should be additional financial relief, but the levels and to whom. I'm not going to get into all the details at this point because they're being changed and discussed almost as quickly as I can talk through this update with you. But just know that there continues to be talks and there continue to be discussions about what that may look like as soon as that happens. No matter how ugly the number of pages look, we're going to pour through it. We're going to come to you with an intermediate kind of update and give you as many details as we can about what we feel like may be most relevant to you. Well, friends, that's all I have for right now. And as you know, I like to be very respectful of your time. Always, 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 please feel free to reach out to me with an email, a phone call. If you just want to chat, I love to do that with you as well, especially to hear about, like I said, what you may be watching on Netflix or what may be your favorite sports moment of the moment. We got golf now, we got football now, and we're in the playoffs as far as baseball is concerned. So, a lot of things that are going on that are enjoyable, but I'd just like to hear from you. And I'd just like to hear about how things are with you. And please never hesitate at any time to reach out to me. And I'd love to chat with you. Well, friends, again, thank you so much for your willingness to engage in this medium. I appreciate you so very much. And until the next time, I'll look forward to chatting with you soon.